Hello, everyone. Thank you so much for joining us today for this webinar. My name is Olga Makarova. I'm a marketing manager at Fofas, and I'll be guiding you through today's session. Today, we will delve into Urba360s Credit Opinion and how it can help you make smarter business decisions. Our expert speakers, Ruth Dumble, Group Solutions Engineer, and Francesco Dorente, Solutions Engineer for the UK, will guide you through the nuances of credit opinion and how you can apply it in your business. A few housekeeping notes. The webinar will last for around 30 minutes, followed by questions and answer session. So if you have any questions during the presentation, please feel free to send them in the chat or in the questions tab, and we will answer them live after the webinar, after the presentation. But before we begin, I would like to get the sense of where you stand with Urba360 and to gauge your familiarity with the platform. I'll just send you a quick poll. You will see it on your screen shortly. Here you go. Please submit your vote. We would appreciate highly your interaction with us. And to make this session more engaging, we will send out a couple of more polls throughout this presentation. Let's give it a couple of seconds for you to give your replies. Okay, I see that about 40% of you haven't started using Urba yet, and 37% have been using for a while, and a few of you are just starting. Okay, great. Well, we hope that after today's session, you will have a better understanding of Urba and Create Opinion in particular. And with that, Ruth, I give the floor to you.
Thank you so much, Olga, for that. Good morning, everyone, or good afternoon, depending on where you're joining from. Thank you for joining us today. So let's begin. First, I would like to introduce Corfus and the foundation we've built to support business globally. If this is your first time hearing about us or over 360 of the business information, then you'll be able to get more information. So yeah, at Corfus, we have over 75 years of expertise, and Corfus has grown to become a global leader in trade credit insurance and business information. We're empowering businesses across nearly 200 countries. And one of our standard achievements is providing over 670 billion in trade credit insurance, which helps business safeguards their risk in volatile markets. What truly set us apart over the years is that we have a combination of global presence and local expertise. We have a team of over 700 expert underwriters and risk analysts that we would also explain during the course of this webinar as to how they contribute to the credit opinion and credit opinion we use at Cofus Business Information. Um, Before we dive into the presentation of credit opinion, I would like to understand how to explain what the Urba 360 wheel is. So this is a wheel of 6 different elements or 6 different products, and it's like a one-stop shop for all your risk to help make good business decisions. First is the score. And the score, what does the score mean? So the score helps you calculate or help you calculate a business in your portfolio or your partners, your company you're trying to partner with, helps you calculate their probability of default over the next 12 months. Then we have the credit opinion, which helps you evaluate your business or your business partners by offering a credit limit recommendation. We also have the financial ratios, which helps analyze the financial health using key ratios for profitability, solvency, and liquidity. Also on Urba 360, we do have the standard financials as well. So the financial ratios is the added icing on the cake. We have the late payment index, which gives you a score or a form of an insight or an indicator of your payment behavior of your business partners or the companies in your portfolio. And the late payments index helps indicate financial stress that your partners or your supplier has gone through in the past 60 months. Then we have the sector and the country risks, sector and country risk assessment part of the wheel. We have a group of well-recognized economics in the world, and the sector risk assessment helps you understand or provide sector specific insight to analyze your supplier or your credit, the company, your portfolio, to analyze the sector you're trading with, and also assess economic and political stability by giving you the credit risk assessment factor. Before we move to the next stage, I would just want to understand if you've used over 360 before. I'm going to put a poll up and I would really appreciate your response. If you've used over 360 before or call first credit opinion before. Yeah, thank you so much. So, oh, okay. Numbers are coming in. Okay. About 40% say no, this is new to me. So I think this is the right place for you because you get to understand a lot more about the credit opinion and how it works. So right now I will give the button to Francesco to explain how the credit score is created and how it's calculated.
Thank you, Ruth. Good afternoon, everyone. My name is Francesco. I've been working at COFAS as a solutions engineer for a bit less than 6 months now. And my background is in credit risk, in financial services, and the retail industry as well. So I'm here to talk to you a bit about how the credit opinion in particular within the Urba360 environment is built, and hopefully to explain how to use it to make better credit decisions. So as you can see from this slide I put together, if you look at the internal gray circle with the the internal gray circle. This is where I've gathered all the information that forms the base of our credit opinion, the all the information that forms the source of our credit opinion, and this information is all usually publicly available information, and it stems from financial accounts to official gazettes updates, legal depositories, payments that are declared, or ratings from credit agencies like S&P. Also, what we do is we use our own proprietary algorithms to run this data and then output a credit opinion. As we go further out into the bigger circle, we can find the information that we use to enrich the credit opinion, and this information in the outer circle is information that is unique to us due to the nature of our business. So as Ruth explained, we are a TCI business, so we provide trade credit insurance to many businesses around the world. We are present in around 200 countries, and we underwrite 700 billion euros of policies, of trade credit insurance policies. So because of the nature of that business, we are able to leverage the expertise of our 700 underwriters worldwide, that then every time we have policyholders ask us for a policy on a specific client, we have to run our numbers and do our due diligence. So what we have done with BI is that we're not only using uh, the expertise that we have for our own sake, but we are also enabling you to leverage that information. And that information stems from the underwriters. Well, it's usually the underwriter's opinion that's based on the financials, on the claims, the payment behavior, which by contract the policyholders are obliged to disclose to us. So if a company on which many policyholders pays late, then these policyholders have to notify us, and in that sense, we are able to notify you as well. it's not only the underwriter's opinion and the financials and the claims that goes into our data. We are also a global data collection company. That is one of the other services we provide, and that data also goes into our credit opinion and into our score. Then we also have, like Ruth mentioned, a dedicated team of economists that regularly update country risk, sector risk, conduct in-depth interviews and company visits, so that they can gauge the overall risk of the sector. So that was at a high level, a little bit about what goes beyond what goes behind the data. Now I wanted to speak to you a bit about how to use the credit opinion. So our credit opinion is usually capped at 1 million euros. And the reason being that the way it should be used is that our we're so confident in our data that we are saying to you, we are recommending this credit opinion, and you can make your own credit decision with this credit opinion in mind up until 1 million euros. Anything beyond that, we always recommend some kind of manual intervention, some kind of credit risk analyst or underwriter's opinion on the overall picture. So the credit opinion can go from 0 to 1 million generally. As I said, it's influenced by all those different sets of data that I listed before. I also wanted to, and I prepared to show you a real life example of how the credit opinion evolved for the specific company. So for those of you connecting from the US, or those of you who have a background in North America, it might be a familiar example, as this company was based there. But I think it's a relevant example in general. So this was a renowned fabric and crafts retailer in the US. The company history here begins in 2019. As you can see in the graph, I've also included the score here on the blue line. And the reason being that we always recommend looking at the different elements of the wheel holistically. So they always should be looked at together and never individually. So in this specific case, I wanted to show you how the credit opinion evolved for Joanne stores together with the score. So on the blue line, you can find the score, and on the stacked graph, you can find the credit opinion. So the story here begins in 2019. The company was a famous, renowned fabrics and crafts retailer in the US. And as you can see, it didn't start very well. Anything 4 or below is considered high risk for us. So anything below 3, we wouldn't insure. In very, very rare cases, we wouldn't insure. And usually you would find that anything 3 or below is always a credit opinion of 0. Because again, 3 and below, we're entering the red zone for us. So here in 2019, the company, didn't have a great outlook. We had a score of 4. Credit opinion here, you cannot really see that well, but the credit opinion was 20,000 euros. So not that great. However, the situation improved later on in the summer of 2019, and the credit opinion briefly jumped to 800K. However, due to COVID and the retail crisis that followed in 2020, the score was lowered to 3 and then to 2 due to financial challenges and store closures. This briefly improved as COVID not only brought some challenges, but it also expanded the sector. So there was a surge in DIY, a surge in home crafting activities. So the company seemed to be improving throughout 2021, and the score went up to 4 again, and the credit opinion followed the score. Going up to 100K. Unfortunately, for the company, the restructuring and the changes that were um, put in place were not enough, and the company eventually filed for Chapter 11 bankruptcy, and the score was reduced to 3 and then 2, and the credit opinion to 0. So this is just a bit of an example of how the credit opinion evolved, and you can see that despite we didn't start with a very high credit opinion, you can see how we were able to sort of um, use the credit opinion as a proxy of the risk of the overall company. Um, and if you have any questions, or you want to know a bit more about this example or other examples, or how to use the credit opinion, please ask away. We'll have a Q&A session at the end. But that was it from me for now, and I'll pass the floor back to Ruth.
Thank you so much, Francesco. Um, So now that Francesco has explained the source behind credit opinion, I think it's time for us to understand why credit opinion matters for your business. So let's start from the foundation and understand why they matter in the decisions you make every day in regarding your clients, your partners, or suppliers, or to help with your financials, depending on the use case or the persona that is involved. In my experience working with large data sets and supporting decision makers, one thing is really clear. The thing that's really clear is that all these people require expert assessment, and that's what we have at COFAS, and that's what we give at COFAS, with the fact that we have over 700 underwriters and experts that look at these companies to give a credit limit recommendation. And not just the expert assessment, real-time decision is needed by decision makers to help onboard new clients or set credit limits or approve the trade terms before they sign a contract, depending on what the situation is. And that's what credit opinion, COFA's credit opinion does for business in this part. I would say that you should think of the credit opinions as your business radar. They just don't tell you where you are. They help you to see what is coming, whether you're onboarding a new client or you're reviewing an existing one. The opinion should give you the confidence to move forward, or either to step back while doing a business engagement with any company. I would go next to explain the contextual importance of the credit opinion. Who uses the credit opinions and why do they do that? What's the relevance of that? So we know that each team uses the credit opinions differently, but the goal is the same. The goal is to, one, first, make smarter decision, and secondly, to make a faster decision. For example, if a credit manager might use it to approve a new client, a finance team would probably want to use it to adjust the credit limit based on updated risk. So the reason could change, but the main goal is the same. I kind of pointed out three key personas here, which is the chief financial officer, the head of supplier risk, and the credit risk manager. We know that for a supplier risk, head of supplier risk or a risk team, their major goal is to ensure the supply chain has continuity. And we know, or one of the relevance of the credit opinion to them is to help them monitor those suppliers in case there's an early sign of financial distress, because at this point they'll be able to navigate if there's a negative shift in a supplier risk opinion, or that would help them trigger and help them plan better, right? In for either sourcing alternatives or either moving forward without them, depending on what that supplier is to them. Another key persona that I highlighted here is the credit manager. So a credit manager's aim is to manage a board, review credit limits, and that's one of their major aims. And I would like to ask Francesco this. What would you say is the relevance of a credit opinion to a credit manager?
Yeah, thank you, Ruth, for the question. I believe that the credit opinion can be as relevant to a supply. Did you ask about the supply, the
A
head of
credit
supply,
manager.
a
The
credit
credit
manager?
manager. Yeah.
Oh, so this is an easier question. Um, well, the credit manager's role is to manage and review credit limits. Therefore, I think it's kind of self-explanatory why it might be useful for the credit manager to have a credit opinion. And I think uh, a lot of credit managers struggle because of the lack of transparency on certain counterparties, or um, the even sometimes in my experience, the lack of different point of views. um, with the tool that we provide, you're able to um, observe what is our point of view as a business that's on risk to a lot of these companies, and you're able to leverage that knowledge that would otherwise be unutilized. If you have any other specific question, I can maybe use my experience to exemplify how the credit opinion
No.
could be useful. But
Yeah.
on a high level, that's my answer.
Thank you so much, Francesco, for giving that explanation on the relevance of the credit opinion to a credit manager. So back to the point I was trying to make clear is that regardless of the key persona, regardless of the team that use the credit opinion, they have different use for them, and but the goal is the same, to ensure that they make smarter business decisions. So if a finance team rely on the credit opinion that we provide, it would help them, set credit limits and manage their exposure. If a CFO uses it, it will help them, the credit opinion will help them validate their strategic decision and then protect their working capital. Same, if a procurement manager would go the same with the supplier risk, it would help them assess their supplier reliability before signing a contract. So it could help at the onboarding or in the process of the stage of doing business with your partners or not. Um, before okay Now, in order for us to go to this part, so at before I'm going to show you what Urba 360 looks like and what the credit opinion part of the wheel looks like. But before that, I would like to explain that we have explained the sources behind, and we've been able to tell you the if we use if we assess the group company, or if we use financials, public access or press article or public comment or private comment. But one thing that is an added advantage to our credit opinion is that we give short explanatory notes. So in a case where a company has probably an outdated financials, for say in the past 3 years, we would recommend an amount following the order drivers of the credit opinion or the score, and then give an explanatory note as to why. Type of explanatory notes that you could find is the weak profitability, decision based on Koffer's assessment of the group, lack of financial information. This could be, the explanatory notes are very short, but it could help you in deciding how to manage it. So I think at this stage, I would want to show you shortly, in about a minute or less, what it looks like. So this is the Over 360 platform. You go on the platform, you search for a company, and you get a company. And this company is called ABC Limited. This was just it's a demo. And on this company, we can see the beautiful colors. So these colors are indicators as to how this company is looking. The leg payment index is saying keep track. We have the credit opinion, the financials. We have the KYC part of it, where you see the name of the company, the information of the company, the main partners or shareholders of this company. And if you scroll down, you see the score we've given this company, what we recommend. The financial ratios that I talked about in the beginning, bearing in mind that you could deep dive into this and also get a classic business report, and you could also see the standard financial report of this company. But like I said, the financial ratio showing the solvency and liquidity, the profitability, and also the ranking ratio between how they also rank in that sector. The late payment index, the country and sector risk assessment. But the thing is, we're here for the credit opinion. So I would click on the credit opinion. In this company, when you click on credit opinion, you can see what we explain our credit opinion is and how it could help your business. And at this point, we're recommending 1 million, but there's also an explanatory note here that says decision based on COFA's assessment of the group. Just just to mention, when we recommend €1 million for a company, you can assess a specific amount, and then the 700 or one of the 700 underwriters or experts that we've spoken about would likely pick this up and tell you or evaluate the company and give you back a feedback as to if we accept a 2 million or 3 million, or whatever that would give. So now I'm going to go back to the slides and highlight this. So you can see at the end part of the slides, there's the place that said Colfax recommends €3 million, meaning that this company had €1 million before. They assessed a specific amount, and then this was looked at by the experts as that we've been talking about, and then the feedback was given. Right. So it's time for us to wrap this up and then leave the floor for you to ask questions. But in order for me to wrap it up, I want to ensure that you've been able to understand what we've been explaining. We've explained why credit opinion matters. We've explained the source behind credit opinion. We've explained how we come to the credit opinion and the problems that credit opinion solve for different businesses. So credit opinions are fast. Core first credit opinions are fast, reliable, and actionable. And we know that this would empower your business to trade with confidence, reduce risk, and also move quickly. So there's uncertainty, as we've solved the problem of uncertainty, we've solved the problem of speed, and also transparency by giving the explanatory notes. Yeah, so thank you. And that's all from me. I'll give the baton back to Olga.
Yes, thank you so much, Ruth and Francesco, for such a detailed walkthrough. We have another poll that we would like to share with you. It's about how confident you are to use create opinions to make a partnership decisions. Please let us know after this session how confident you feel. Let's give it a couple more seconds for you to send your vote. And in the meantime, I would like to tell you that it's time for our Q&A session. Please send your questions in the questions tab or in the chat. I know there are a couple of questions already there. We'll make sure to answer them live. We appreciate your participation, so don't be shy. Okay, and we see that a lot of you have answered the poll already. About a half of our audience is very confident in using creative opinions to make their partnership decisions, somewhat confident about 30%, and still learning about 20%. Well, thank you so much. We hope that this session brought you a bit more clarity. And now let's move on with the questions. Francesco, Ruth, I think the first one is about the use of AI. I'll let you read the questions.
I can take the first one if you want.
Sure.
So the first question is from Yun Ming. Apologies for my pronunciation if it's wrong. The question is, do you use any AI tool to analyze this data or do the calculation? So we have a data lab, and they're currently integrating AI tools for the calculation of the score. And this will be rolled out next year. I don't have details about it, but yes, I can say that we do use AI. Ruth, if you want, you can take the next one or
Okay,
choose
sure.
another one.
I'll see the next one. Oh, so the next question is, how often are credit opinions updated and what triggers a revision? So based on what we've explained are the sources behind how we calculate the credit opinion and the insights. So the major triggers include the financial statement, the payment behavior, that's the LPI, legal filings, press articles, private comments, confidential information, macroeconomic shifts, the credit, the country and the sector assessments. Those things are the kind of things that trigger the change of the credit opinion. And how often is it updated? So if it's monitored, it's if there's any change in any of the things that I mentioned, an update would appear. It could be either monthly, maybe a company's financial, or we have a private company this comments this month, and then there's a legal filing next month. It could change next month and the other month if it's a monitor credit opinion. So that's how often we um we change it. So I'll give you the floor, Francesco.
Thank you, Ruth. I've seen an interesting question. I think I'm going to take that one.
Okay.
It's a question from Zoltan. So it's a bit long, but I think it's a very good question. So I'm interested in the group-wise evaluations. How do you investigate the groups as totals? Do you collect consolidated financial statements? How do you evaluate them, even in terms of credit risk analysis? How can one find your financial full report data about consolidated annual financial reports inside COFAS services? Um, so whenever we analyze a business, we always, and if the business is part of a group, we always take into consideration the group as a whole. In Urba360, you're always able to see, and at the start of the page, you're always able to see the ownership structure of the company. And as I mentioned before, because we have 700 underwriters worldwide, these underwriters always do their analysis on the group as a whole. So you will never find a company that, for example, is on paper, is not very profitable, but just because, for example, for legal reasons, the profits are reported on another entity, for example. So it could appear that a company is not profitable on paper, but really, if you as you mentioned, Zoltan, if you take the group into consideration, you really would see that the profit is posted somewhere else. And this is just an example of when the group is taken into consideration. In terms of the consolidated financials, if they can be found, it really depends on the jurisdiction. So usually the financials are related to the entity that you look up on Urba. And if we have financials, but we have some sort of NDA and the scoring is influenced by that, we cannot disclose them. But for example, because we are in the UK, for the UK, here we have companies house, so you're always able to then research them. And usually for large groups, these are public anyway. But yeah, so that's it. Very good question.
Okay,
Ruth,
I think I could.
yeah.
Yeah, I think I could take another question. There's a question there, and let me read it out. How do you recommend integrating credit opinions um into existing risk workflows? So integration, right? You could use the dashboard directly, just a website, log in, have your username, password. At that point, you have the one-stop shop. So you would have the Urba360 and, if possible, any other business information products that we currently have that you have access to could be hopefully is linked there. And secondly is the API. Integration could happen through the API, so it's faster. When a change happens, you get a notification, and then your risk team can pick that up. Thirdly would be SAP for HANA. We're also embedded into SAP for HANA as well, so that's another form of integrating. Right.
I think there's one Have we answered the question about the coverage in different
Oh
regions?
no. So yeah,
No.
no. Do
Uh,
you want to?
so question from Lindsay. Sounds like the credit opinions cover many different global regions. Do you find that there is more coverage of European companies versus NA? I'm assuming that's North Africa
Maybe North
companies or other
America.
regions.
North America.
North America. Okay. Sorry. Um, well, I think there's always a difference in coverage. I think we're really strong in EMEA, but it really depends. We're always looking at expanding. We recently acquired Cedar Rose, which is a data insights company based in Cyprus that covers the whole Middle East. So we have recently expanded our coverage for the MENA region. Um, but generally speaking, we operate out of 160 countries. We have 3 back offices in Peru, Morocco, and forgot what the other one is. But we have 50 information centers, so we have people on the ground
Yeah.
that know the different jurisdictions.
Yeah. Yeah. I think that's that's the best answer to give to that. Right. I don't think
Thank
there are
you
any
both
other
so much.
questions.
Yeah, I think that is all for today. Thank you all for your participation. And of course, thank you, Francesco and Ruth, for such a detailed walkthrough of Urba360's Credit Opinion. We appreciate you coming here. We hope that you enjoyed this session and you will receive the recording and the slides after this. And look forward to seeing you in our next webinars. Thank you so much. Have a good day.
Thank you.
Thank you. Bye. Thank you.